It's really about creating something that doesn't exist today because it's no compromise. So a customer doesn't have to compromise on price, quality, variety. We offer 25,000 SKUs and obviously in 30 minutes delivery time. So there's no compromise and you can get everything you want just like you could going into a Kroger store.
How do you get things faster? I take it this isn't different locations. You'll still be using the Kroger stores for doing this, but how do you step up the time frame like that?
Yeah, it's really leveraging the assets of both of our companies. Instacart has the ability to have people get to the store quickly and get to the customer quickly. Obviously, our stores are incredibly convenient. Together, we're able to map a store out so an Instacart shopper can figure out a way to go exactly to the spot within each store. So it's really leveraging both of our existing assets in an incredibly asset-light way and offering something new to the customer.
Yeah, obviously having the assets and using those has been a real plan for success for places like Target and for what you guys have been doing to this point too. There have been a lot of questions though. People are wondering how consumers are reacting now that a lot of people are kind of coming out, have been vaccinated. Are they changing their patterns? Are they shopping online less? Are they more likely to go into the stores? How's that working out?
If you look at early in our second quarter, shoppers were going into the store more and using pickup a little bit less. Still over triple-digit increase versus 2019. Everything that we can see, it really accelerated 2 or 3 years worth of growth in 1 year, and it's maintained at that higher level. The other thing customers are telling us is they've learned how to cook. They're proud of the fact they've learned how to cook. They're enjoying eating as a family. And those are things that are obviously helpful for us as well.
Yeah, I enjoyed it for a while, but I have to say it got a little old after every meal for 18 months straight. I've definitely been looking for other people doing some of the cooking lately. But I hear your point. It is good to have everybody learning how to cook and sitting around the table and doing it together. Fiji, I think you're good again, and I'm sorry for our technical difficulties. I'm not sure if you heard the opening part of this conversation with Rodney, but let's talk a little bit about this partnership and what it means. How is it different from what you're doing with other partners right now?
Absolutely. Well, we're very excited to partner with Kroger on something that's truly unique and innovative, and that says a lot about the fact that Kroger wants to always be ahead of their customers' needs. I would say the thing that's really innovative here is that we are bringing the big selection that Kroger offers of 25,000 products to customers in less than 30 minutes, and that means that customers don't have to trade off between speed, price, selection. And that's really new in the convenience market.
Fiji, I know there's been a lot of excitement around your coming to Instacart. People look at your experience with Facebook and before that with eBay. And maybe one of the questions you can answer is what you learned at Facebook and what you think that you learned there kind of translates into what you can do at Instacart.
Well, there's a lot of learning about obviously running a company at scale and running a global company, and Instacart certainly has global aspirations. The other thing is obviously Facebook has a great advertising business, and we are building one at Instacart as well alongside our partners. So these are things that I'm thinking with me on the next job.
Rodney, let's talk a little bit about some of the challenges I think that a lot of companies are facing right now, grocery store companies and others too. And that's inflation. That's when it comes to wages, how you get people, how you find them, how you hire them. And then also the inflationary pressures that puts on your margins, not just from what's transportation costs, from the supply chain issues, but from higher prices across the board. How do you handle that?
Well, one of the things over the years, we've operated in low inflation environments and high inflation environments, and you figure out a way to manage your business. And one of the things that we use is our data to understand which items are customers less price sensitive to. If you look at overall, I think customers are expecting a little bit of inflation in the environment we're in. As a general rule, we're able to pass it through in places where we need to. The other point you made, Becky, was in terms of fighting, we call employees associates, but we have about 20,000 openings right now. We're aggressively hiring anywhere we can. And one of the biggest constraints we have right now is finding talented people. And we've continued to increase wages. We've been able to do that. It's part of the long-term plan where over the last 3 years we've increased wages by $850 million a year. We are increasing another $350 this year. And through work process changes and using technology, we're able to make everybody a little bit more productive. And that's really how we're financing those increases in wages.
Shepard Smith here. Thanks for watching CNBC on YouTube.